Hey, it's Andreas. I've been investing for over 10 years, and in today's video we will take a look at the options activity ahead of MPW earnings. We have an article here from Benzinga titled "Investors are taking a bearish position on this popular healthcare REIT. Are they indeed, or are they hedging their bets?" There are different opinions on this. We will walk through the article real quick and then look at the option trading activity in question. We're seeing here investors with significant funds have taken a bearish position in MPW, a development that retail traders should be aware of. Are they, or are they hedging? Well, opinions differ. This was brought to our attention today through our monitoring of publicly accessible options data at Benzinga. The exact nature of these investors remains a mystery, but such a major move in MPW usually indicates foreknowledge of upcoming events. Well, of course, the nature of the investors is a mystery in this case. You only see the broker of the selling part and you see the broker of the buying part. Just like when you're seeing stock transaction, you see what brokerage sold, what brokerage buys. You don't see the exact individual. So yes. Today, Benzinga Option Scanner identified 8 options transactions for Medical Properties Trust. This is an unusual occurrence. The sentiment among these large-scale traders is mixed, with 25% being bullish and 62% being bearish. Of all the options we discovered, 7 are puts, valued at about 1.5 million, and these a single call worth about 30k. Of course, earnings are upcoming and options activity tend to increase just before earnings. It can be either for speculative purposes or it can be for hedging purposes. Remember Bill Ackman when the whole pandemic came and he had a whole bunch of puts to hedge all his positions, crying on national television as he made billions while the value of a lot of stocks crashed. Classical example. I will just jump over these parts in the article. I don't think they're relevant. You can pause and read if you want to, but we will look into volume here. So we can see a spike in put option activity here, and we saw a spike in call option activity in the past here. So to the meat and bones of the article. The biggest options spotted. Interesting. We're seeing puts here for all of them. And then we can see the expiration date. So this means you have the right to sell shares. One option means 1,000 shares. So there's a lot of leverage in them. And we're seeing, for example, let's just walk through the options here one by one. They're all puts. They're all the right to sell a certain stock at a strike price at a certain date. That certain date for the first options trade here is January 2025. And the strike price is $10. So this person does not think that MPW will be trading higher than $10. If they do, they will be worthless. It seems like longer term speculation in this case. It's a longer position and it gives off the vibes of a more speculative nature. Whereas we're seeing here a option with expiration in October, and we're seeing a strike price of $4.50, closer to the trading price that we're seeing today. This gives off more of a hedging vibe. This is, in my opinion, likely somebody who holds the stock. And to make sure that they don't lose a lot of money in the upcoming earnings, they have hedged by buying the right to sell here. And then we also see a even shorter one here in, this is September, with the strike price of $6. And then we're seeing another one in October once again with the lowest strike price so far, tied with these three, I assume. And then we see 4.5 once again, strike price October, and then the final one we have a expiration date that's also in January of 2025, but for $4.50. So the right to sell at $4.50. This means if the stock price drops a lot, then these puts will increase in value. So if they hold the position, they have a lot of stocks and they're afraid of upcoming earnings, it's a very risky stock, there's a lot of volatility, then a put can be one way to hedge volatility in the portfolio. If the stock goes up, well, they make money from the increase in value on the stock price, and the options are going to become worthless, so they lose that asset, so to say. But then if the stock price drops a lot, well, then their puts are gonna print and the loss is not gonna be as bad. I think that we're seeing the shorter ones here being more of a hedging nature, and then I think that the longer ones here are more of a speculative nature in my opinion. But what do you think regarding these option trades? Post a comment regarding it. It will be very interesting here to see the upcoming earnings for MPW. It's a stock that has some temporary obstacles right now, so there's a lot of speculation going on. Of course, we're seeing larger than usual swings in the value of this company as a result of all this uncertainty around it. And I think that the earnings call will be quite interesting to follow along on. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.